Good morning. Good morning from Los Angeles. Welcome to Power Hour every, what is it, Friday today. Thank God it's Friday. Friday at 10 a.m. Pacific, 1 p.m. Eastern. We are live. Let's go through the schedule real quick. I have to have a hard stop today at 11 a.m. I have a super important call at 11:15. I want to be ready for that. How do you guys like my new professorial look? I don't know. I don't like it. It makes me look like 50 years older. Nobody at home likes it either. So on Monday, when I do Trading with Sergio, it'll be gone. So welcome to Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Every Monday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. My wonderful members group who are fascinated with what's going on in my account at the moment. I do a live stream for them. So if you want to support the channel that way and have access to me for a Big Mac, you can please click the join and become a member. You get a few perks. One, obviously, you get access to me and my live trades on a Telegram chat group. Number two, you get a live stream every Wednesday where we all put our faces on the screen and wonderful questions being asked. They're getting introduced to some new tools. Pretty confusing, I think, the way I explain it especially. But I'm doing my best. So please support the channel, become a member, and you get access to replays of the members-only live streams, but also you can participate in the members-only live streams every Wednesday between 3 and 5 p.m. Pacific, depending on my schedule. But those I really like doing. So what's going on today? So it looks like tariffs are back, just like the headline said today. Tariffs are back. Are these markets tradable, honestly, these days? I mean, if you have overnight exposure, God help you. I mean, seriously, if you're long, President Trump says something, Apple tanks $7 at the open. How do you deal with that? I don't know. So I'm trying to keep my powder dry. I'm trying to keep buying power on the side, but this is the most exposure I had in the market, but I am kind of neutral almost. When I go through the positions, you guys will see it. I am definitely adding to exposure, but on a kind of a neutral way. You guys will. I'll put the positions up with full transparency. As far as positions are concerned, every Monday, Wednesday, Friday, I post my positions, whatever I have. Again, none of this is trading or financial advice. Don't do what I do. I know what I'm doing. If you don't know what you're doing, and I look at my account as I said this before, as a supermarket basket. I put a whole bunch of things in there. There's only one thing that I watch. It's called net lick or net liquidation value, which is account value, equity value, whatever you want to call it. It's on the upper left-hand corner on Think or Swim. My eye is glued on that. I'm not concerned with what's happening with individual positions because one goes up, one goes down, just like today. One is helping, one is hurting. I don't care. I'm just looking at equity because if equity is going higher, if at the end of the day it's green, that means you made money. It doesn't matter if one, and the exposure I'm putting on is not the type of exposure that's going to make me or break me, but then I'm trying to get a monthly return out of it. Important thing to understand is, again, this is not financial or trading advice. Do your own due diligence, but then if you do become a member, you're going to learn quite a bit. I think we have one member who's already, he does these things that I just go, he has zero. He knows who he is. He has zero hesitancy of pulling the trigger. I love that because the only way to do this is to do it. To learn. The only way to learn it is to do it, right? We can paper trade all we want, but when you put the car in the race, there are cars all around you. There's walls, right? And that's what I look at trading as. You're just going to go hit a wall or two or three or get in a wrecks a couple times, and that's how you're going to learn. That's the only way to learn, to do it. In that sense, you have to make sure your position sizing is correct so you don't blow an account while you're learning. Okay. Most important thing is the 3 P's. I said this for a year now on this channel: patience, position, planning. Well, do you have patience? You should. You have to. You can't go after every bit of news like today. If you read that news, market opens on its butt. If you shorted the market after it opened, you're already eating it. So to me, it's like, don't get pushed and pulled with news. This is going to be how it's going to be for the next 4 years, folks, or 3 years, 3.5 years now, or whatever we have now. President Trump is a happy tweeter, and out of the blue today, he said Apple should pay 25% tariffs on every phone that's not manufactured in the U.S. And where'd that come from? I don't even know. What is happening? And then he said 50% tariffs on cars that are not manufactured in the U.S. How does he wake up with this? Or does he consult Besant? He goes like, I'm going to tweet, are you short the market? Or look, I'm being facetious, but it's really fascinating to me that in my all 30 years, I have never experienced this. Okay, think about this. How many times, not that Biden was alive, but in the past 4 years of Biden, how many times did he tweet and the markets opened up or down 3, 4, 5%? Never. How many times actually in his first Trump administration, the first 4 years, he was doing some of this, but not to this extent. And I mean, listen, there's only going to be one CEO for the next 3.5 years, like it or not. If you go listen to Palantir CEO, NVIDIA CEO, Apple CEO, Google CEO, they all say things. They all do conference calls, earnings calls. They say stuff. Okay. Does it mean anything? Not a lick. Nothing. There's only one CEO for the next 3.5 years. And it seems like these things come out of the blue, right? Yesterday, actually, in the afternoon, China said, we're still talking. Cool. We're progressing on some sort of resolution. And this morning, I wake up, I look at my phone, Apple should pay 25% tariffs. I'm like, where'd that come from? What happened? Did you have a talk with Tim Cook and said, this is what I'm going to say? No, he just talked to Besant, talked to, I don't know. I don't know where these comes from, because what happens is that, see, my concern is not the stock market. The stock market is going to do what it's going to do. The volatility is there. If you know what you're doing, you can make some money this year. Otherwise, the market's actually flat compared to last year. But my concern is the bond market. I've been talking about this for a long, long time now. Nobody can control the bond market, okay? It has its own thing. It's so big. Trump can control it. Fed can't control it. Jay Powell can't control it. Nobody can control it. I urge all of you, while you're watching me, don't turn off. Go Google what is happening to 30-year JGB rates. JGB is the 30-year Japanese Treasury bond rates. Look at that graph. It's just skyrocketing. It's a 3.5%. So I talked to my members about this. So today I'm going to talk to you guys about it. I explained to them the first episode of Japanese yen carry trade. What happened? Remember, last August, market down 20% like this, right? Okay. Well, we're getting close to part due on Japanese carry trade. How many of you watch macro when you're trading? How many of you watch the dollar-yen exchange rate? How many of you watch what's happening to the 30-year JGB rates versus our 30-year bond rates? Our bond rates are shooting up through the roof. What is happening? Gold is shooting up. Bitcoin new all-time high. There's so many conflicting signals that I can't even catch up and make sense out of all of this. But one thing I'm making sense of is, like my prediction last year was, volatility is going to be much higher than what it was in 2023, 2024. That is definitely proven correct so far. I'm not concerned. I'm concerned with what the bond market is doing, because what the bond market is doing, the Fed can cut the rates all they want. It doesn't matter. All our mortgages, all our car loans, all our credit card balance, interest rates, they're all dependent on the 20-year bond. 20-year bond is shooting through the roof, right? We're at like, well, 30-year bond is over 5%. So when that is over 5%, what do you think is happening to the 30-year mortgage? If you want to buy a house, not that it's affordable, but if you want to buy a house, mortgage rates are all-time highs. Well, not all-time highs, obviously, 7.5%, 30-year fixed. It was like 3 during the pandemic. Well, just that alone is going to stop you from buying a house. The housing inventories are going through the roof, right? Is there going to be a housing crash? I don't know. I don't think so, because the bond market is saying inflation is not dead. Tariffs are going to, on the longer term, are going to hurt, the inflation numbers. Inflation is going to come back. Fed is saying we're in a box. We can't lower rates. Trump administration is saying, Fed, you're stupid. You're behind the curve. Lower the rates. The bond market is saying we're not going in a recession. Everything is fine. In fact, the economy is heating up. Not if you ask that to the average American, obviously. Nothing is heating up. We're just paying more and more for everything. And the bond market goes, no, I'm just going to raise rates. We have $9 trillion in bonds, notes coming up for refinancing in 2025. $9 trillion. And why is that? That's because of our $37 trillion in national debt. The coupon on these new issues, first of all, on those IOUs, you cannot say, I'm just not going to pay you this year. I'll pay you next year. I'm like, no. You guys know what happened with the Moody's cutting the Treasury rating from AAA, right? Not that it means much, right? Because we still have the printers. We can do whatever we want with our money. Incorrectly, obviously. We shouldn't be printing anything. We shouldn't be spending what we don't have, but that's our government. So there's so much going on, seriously. So the concern for me is that there's it's a global market, right? But US is the guiding light of every single stock market on the planet. We have the most liquidity. We have the most trustworthy accounting. Are we going to lose this? Because if we keep doing this, right, the roller coaster thing, people get nervous. Are we going to lose that? Because there's trillions of dollars of investment in the U.S. equities market. So going real quickly back to the Japanese yen carry trade part 2, potentially, I want all of you to watch on a daily basis the U.S. dollar Japanese yen exchange rate. We're at 144, 143 and a half. If we go below 140, watch out. Hopefully it won't happen, because the carry trade will get unwound again. The other thing that potentially could unwind the carry trade is Japanese bonds are at 3.5 now, 30-year. Ours is 5. That spread used to be 4.5. So when all these hedge funds with 20x leverage, when they went and borrowed in Japan at 0 and came and invested in U.S. stocks or U.S. bonds at 4 or 5, and we know what happened to stocks, that's the carry trade. Well, they will have to unwind that, because the spread is getting narrower and narrower, and then the currency losses are going to happen, because if the Japanese interest rates keep going higher and higher and higher, shooting higher, the yen is going to get stronger. When the yen gets stronger, because you're not borrowing in the U.S., you're not investing in the U.S. with yen. So when you go borrow, right, you exchange your dollars to yen, borrow the money, come back, U.S. dollars, you invest in U.S. dollars. Okay, so let's say you went and bought the bond, or you went and bought the stocks, some sort of index or NVIDIA or whatever you bought, right? Okay, well, you bought that with U.S. dollars. On the other hand, if Japanese interest rates keep shooting higher and the yen keeps getting stronger, now you have currency losses, because when you do go back to pay that loan back, you're going to pay it back in Japanese yen, right? So the exchange rate is very, very important when it comes to the carry trade. So there's so much going on. Seriously, I can talk about this for like next 2 weeks and I won't be finished. There's I'm not confused, but I'm trying to understand and inform whoever watches me, a dozen of you, to make you comprehend what part of all of these moving parts is the most important part. Obviously, President Trump tweeting, whatever, it's super important, but it's very short term. However, there's long-term structural things that you guys need to understand. And that is the carry trade. That is what's happening to inflation. What is happening to the bond markets, right? Can you short-term trade on macro trends? Probably not. Can you sell some, naked puts or cash secure puts by looking at 6-month, 8-month, 2-year macro trends? No, obviously not. But once the train gets rolling, these trends take a while, right? The US bond market, corporate bond market, junk bond market is in the trillions and trillions of dollars. Nobody can move that. It has its own animal. It has its own mind. The bonds are going to do what they're going to do, but all the consumer interest rates are tied to those rates. They're not tied to what the Fed funds rate is doing. They're not tied to what the Fed is doing. Fed, with all its might and power, can't control that. Then I'm looking at Bitcoin, making an all-time high. What is Bitcoin saying? Then I'm looking at gold, almost at an all-time high, over $3,200. What are those two asset classes saying? They're saying inflation is not dead. We're not going to control the deficits. Doge is bullshit. I think Elon quit already. We're not going to lower the deficits. There is a tax bill that's getting passed, which everybody, right or left, says it's going to add to the deficits by the trillions. So gold and bonds and Bitcoin is saying, well, back at the ranch, nothing has changed, right? So they're making all-time highs. So that's the only protection you have, by the way, through Bitcoin, through gold, or somehow through real estate in hard assets, to protect the loss of buying power you're experiencing on your US dollars that you're holding. But the stock market is not paying any attention to that. But stock market is also very fickle. It has its own thing. It's because once they decide, then the selling starts, and then we know what happened last month, right? 20% on the SPX and 25% on NASDAQ in 4 weeks. So be on the lookout, folks. Make sense. Try to make sense of all of this. And then hopefully, we'll come out the other end. Well, hopefully the light at the end of the tunnel is not a train coming at you. But if you practice the 3 Ps, right? Patience, position, and planning. Markets open every day. You don't have to trade every day. You don't have to own something every day. My suggestion for most people who watch these kind of things, or YouTube finance channels, there are many, is look, long-term investing works. Passive investing works. I have passive investing. I have an investment account. I'm old now. So the trading that I do is to increase my return. So if you are actively trading, and if you can't beat the market by 2x, 3x, what the benchmarks are doing. So let's say if last year, if you were trading, okay, market was up 25% on SPX. That's the benchmark, or S&P 500. If you didn't bring in 50, 60, 70%, don't do it, because you're going to get blown out when something weird happens, okay? So last year, it's actually on the channel. Go look at my results. I have full transparency. Losses, gains, whatever it is, to me, is like I post it. You read it, you read it. You don't read it, you don't read it. I am really, really concerned that there is a disconnect between stock valuations at the moment and what the bond market's doing. I watch the bonds. I've been watching the bonds. There is definitely a correlation between what happens to bonds and to stocks. Because if you can invest on a risk-free, let's say, return of 5%, why would you go mess with stocks, right? There is competition between, we're all chasing return. There is competition between bonds and stocks. And at some point, stocks are going to pay attention to interest rates. They're kind of ignoring it at the moment, but at some point, they're going to pay attention. Is it at 5%? Is it when the 30-year reaches 6%? I don't know where that is, but you guys will know. So I don't know. I don't have much else to say because I'm going to cut this at 11. Because I also, by the way, if you guys want to join, here it is. Here's the link. You can show your pretty face and we can talk about whatever you guys want to talk about. After I go through the positions, don't do it yet. Let me look at There it is. 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 Okay, let's see. Vic G, good morning. Good morning. Vic, you need to become a member. It's a Big Mac, bro. Seriously, that's such a good chat group. Telegram chat group. Jeff B, good morning. It's good. Jeff B, looking for, Jeff is new. Oh, no, actually, Jeff is from the other channel. Looking for the dividers they have on SMTMC. Okay, this is not the channel for that. I don't talk about the other channel whatsoever. So I don't. Yeah, I don't even touch that. I love doing this a lot more than the other one. Exactly, it's about the news. Well, it will mean at some point. Luis, good morning. Okay, Jeff is hot today, so yes, sometimes I need to skip ahead here about positions and why. Yeah, I don't. We're not doing the dividers. You just have to just skip through, probably. I don't know. But my positions are posted every Monday, Wednesday, Friday. And if you do become a member, you get it live because I take a screenshot and post it on the Telegram chat group. Holy crap, Jeff! Hold on a second. I trade futures contracts. Okay, cool. Good. Sounds good. Good. Okay. Yeah, trading futures. You know, you're a day trader. Yeah, I don't day trade. I don't think we'll have a day trader in the chat group. Not necessarily. I don't pay attention to too much to conspiracy theories like that. It doesn't matter. Every president does that. I mean, you know, you don't think insiders benefit? Why do you think they go, you know, contribute to their campaigns millions of dollars? I mean, you got to have access to power, and that's power. What I said, though, is true because I don't recall a president having this much fun. I mean, I don't know if he's having fun. I'm sure he's having fun. But it's like every word is just, if you're on the wrong side, you're going to get your face ripped off. I think he makes this noise, man. See, this is the problem. Conspiracy. Who cares? I don't care about my account. Okay, I live in the zip code of 91344. That's my country. That's it. That's all I care. The rest is noise. That's why I said don't get pushed and pulled with noise. Noise is noise. Noise is always there. You know, with Obama, there was noise. With Clinton, there was noise. With Bush, there was definitely noise. But Trump is just takes the cake. He's up here. He's the CEO. So whatever the companies say means shit. Nothing. But the one because no, that bill is actually trouble. Although, if they're going to cut taxes in the middle class, I'm good for that. But somehow, I haven't read the bill, which I'm not going to read the bill. It's probably 8,000 pages long. They passed it. I'm sure there's a shit ton of pork in there. That's why the bond market's seeing that. Bond market goes, nah, this is bullshit. They're not going to cut the deficit. Initially, the bond market was doing well. Interest rates actually went down after Trump took over because they came in with Doge and we're going to cut the deficits and this is ridiculous and we're going bankrupt. And Elon says, country's going bankrupt. I agree with all of that. But where's the beef? Is it happening? Or kick the can down the road as usual, deficits forever, national debt going up a trillion every 100 days. Bond market says, bullshit. I call bullshit. I'm not buying any of this. And rates are shooting up. Japanese rates are shooting up. Their inflation is at 3.5. Japanese rates should be like 6 now. They had zero interest rates for 25 years. They couldn't get a lick of inflation. Now inflation is going through the roof in Japan. Well, if inflation, if CPI is 3.5 in a country, interest rates should be double minimum, just to protect you for that, because it's never, when the government says 3.5 inflation, it's never 3.5. It's probably 5, 6. So anyway, yeah. You said I could talk about that for the next 2 weeks and I wouldn't be done regarding carry trade. That's how I feel regarding lift crappy. Okay, that again, Jeff, don't talk about right share here. You're welcome here, but don't talk about right share. I could not care less about that on this channel anyway. Now, there's a related question. Is 6% acceptable rate of return versus stocks? After inflation on a nominal basis, if the government says inflation is 2.5, which they're saying, which I know it's not, the inflation is about 5 or 7 per year. You know, you can look at your $100 bill, still the same $100 bill as it was 5 years, 8 years ago. But can you buy the same amount of goods with that $100 bill today? Because if the inflation was only 2.5%, you would have only lost 10% buying power. Have you lost 10% buying power, or have you lost all of that buying power at 5-6%? So 6% is the minimum that you should be able to return just to keep pace with inflation. Real inflation, not the bullshit inflation that the government puts out. Soon you send me the t-shirt. That way I will. Well, you become a member first, and then I'll get the t-shirt. I'm fortunate to live in LA. Are you crazy? Have you seen our traffic? Have you seen LA is probably the third, fourth most expensive city to live in. Hell no, I'm trying to get out of Dodge, but I have kids in college and high school. I can't. I don't like it. Don't like what's happening. Have you been to LA? It's not what you think it is, bro. Okay, so okay, I put the link up, so if you guys want to show up, show up. I feel like Jeff is on today. Hold on. Jeff is hot. Phoenix or Minneapolis? Well, about this. Winter's Phoenix, summer's Minneapolis. How about that? How about that? Did you trade it? Nope, I didn't trade anything. You'll see my account in a minute. I'm wrapped up like a mummy with noodle with so many different positions, and I'm just trying to, if I can make sure about that. Absolutely, you're welcome. I answer every question as usual. Okay, should we do positions? Grab the link, Jeff. Come on. We don't bite. All right, you guys can see this, I hope. Yes, yes. Last time I didn't click it, and I just did the whole thing for nothing, no reason whatsoever. So today, I hope I'm not doing that. Okay, so what do we have? What's going on? We have, I will post this at the end of today. We have 4,500 shares of EVgo. Average cost 370, stocks 391. If it breaks out 410, I'm going to add without a question. I started opening a position on Oscar Health. I'm doing a July synthetic. If you guys don't know what a synthetic is, you should definitely become a member. You learn. So I have more to sell and buy. So what I'm doing is I'm selling, stock is 14.20, good earnings, good catalyst. It was about 17 after the earnings, down to 14, pulling back 200 EMA. I got to go quick today. I'm selling the July expiration, regular expiration, July 18th, 15 puts, and I'm buying the calls around 75-cent credit. I've done 20 so far on each end. I got 10 more to go. That's that. Now, Pony AI, I'm going to leave that last because this is, my members are like losing their shit watching that position. I think they're more nervous than I am. I don't know why they're nervous though, to be honest. I mean, it's just a position. See all these positions? See all these? I don't care what one does. I mean, I care, don't get me wrong. But I do it in a way that it's not going to blow my account, right? It's not going to crack me. You know what I mean? So I bought this yesterday. It was a FOMO. I had $1,000 profit within literally 10 minutes. And then one of my members said, take the money and run, Sergio. I'm like, no, it's going to go to whatever. I ended up buying 900 shares of QMCO, which I'll probably sell, but break even today. 1270 cost 1250. I'm down 20 cents. See, this is the problem. You don't take the profits, this is what you face. And, if I get back to break even, I'll get the heck out of Dodge. Quantum stocks are flying. The only one that's not flying is this one. Maybe it'll catch up. I don't know. Not a big position. It's okay. I have 25 put debit spreads going out to June. So those are actually kind of keeping me in balance. When Trump tweets and market opens down 5%, I go like, oh, yeah, okay, that'll save my ass. I had a much bigger position on this. I trimmed the position. I was wrong for now anyway, thinking interest rates are going to go down because I thought the economy is slowing down. I thought the economy is going in a recession. We still may. I didn't close the whole lot, but I had 25 on 3 legs, and now I'm down to 10. I trimmed. You always have to trim when things are going against you. Although you may be convinced that it's okay, you need to trim. And so on this one, I'm going out to March 2026 leaps. Well, it was leaps when I did it. I'm short the 85 puts on TLT. I am long the 95 calls, short the 110 calls. Down about $500 on the overall trade. Not a big deal. It won't make me or break me, but I still think interest rates are going to go down because we may go in a recession. Although, if the Japanese bond keeps going higher, if inflation is sticky, Fed cutting the rates is not going to mean shit. So that's that. And last but not least, I will get back to Pony in a minute. Pony AI. I have 4,000 shares of WeRide, WRD, cost 780. Stock is 980, so we got about 10K profit there. But see, when I post these positions, you guys need to understand what I'm trying to do overall. So I have covered calls against some of the shares at 10, at 12.5, and at 15. Get it? My cost is 780. Stock is 980. But if I get called away at 10, 12.5, and 15, this is like an 80% trade for a month. And I'm also short the 10 puts. So I don't mind buying more shares at 10 minus the premium, which was at 160. I sold them for at 840. So that's that. Now let's go to Pony AI. When I show you guys the chart, you guys understand what's going on. Hopefully you understand. I had initially bought puts. I keep sizing the puts up, and I started selling some 20 puts and 17.5 puts against it, collecting money, turning the just long naked puts to put credit spreads. Honestly, this will take like half an hour to explain, but when I do post it, please take a look at it and try to make sense of it. It's a kind of a neutral position, kind of a neutral to bearish position at the moment. So I'm long 55 of the June 15 puts. I'm short 20 of the June 17.5 puts, and I'm short 10 of the June 20 puts. Pricing 430 and to almost $3 on the 20s and 17.5, 244 on the 55 longs. I keep adding to the puts. The more I add to the puts, by the way, the more bearish exposure I will have. If I cut the put exposure, let the short side of the puts go, then I have more bullish exposure. So this will change as with what the stock is doing. Okay. But when I go to the charts, you guys will understand why I'm doing. Well, hopefully, I understand what I'm doing. I don't know. I mean, my members are confused. They're like, "What are you doing?" I go, "I don't know. I'm doing fine. How you guys doing?" Oh, this is why you said. Why did you buy the calls on SPX? I don't know. Yeah, I don't know. Monday. Markets are closed on Monday, right? So yeah. I don't know. We rally. Stonks always go up. Buy the dip. That's it. Period. Don't question it. So we came and tagged the uptrend line that I had drawn. We didn't close below it. We even closed the gap today. So we have a little bit of a pullback to neutral, to the 20 EMA, which we tagged today to the penny. And we're kind of bouncing from there. MACD is kind of turning down, a little concerning, not much. Could we pull back if we break that uptrend? Definitely. Where can we pull back to? We could probably pull back to 556.60 range, which is 200 EMA, as well as somewhere around the 50 EMA. All the people who talked about, golden cross, what is that called? Death cross, right? Well, today it's crossing back up. So what is that? I don't pay any attention to these things. Death cross, golden cross, blah, 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 blah. So this is SPX. A little pullback, no big deal. I mean, there's a gap down here. There's multi-gaps, actually. There's a breakaway gap right here, breakout gap. There's the there's another gap here that we could fill. Maybe we can get down to 5,700. And it kind of coincides with the 200 EMA, so that's SPX. And let me go through the positions that I have. So this is because I don't have too much time in case some of you want to come on. EV go. long 4,500 shares. I love these patterns. Vic, these labels, Vic, I'm telling you, bro. I'm telling you, think or swim, if you're watching this, I do not want to see those labels. Done. So there's EVGO. I bought it on the earnings day, holding it still, adding exposure. MACD's up above zero, first time for a while. I love these kind of patterns. There's a little cup and a handle action happening. Look, technicals are technicals. There's a name for everything. Sometimes they work, sometimes they don't. But counter trend rally today came down to the 20 between 20 and 50 EMA and tested it and turned up. Up days on high volume, pullbacks on low volume. Lovely. If we do take out the highs, I see a gap up here about 576 range. I think I'll take profits there, and I will definitely add on the break if it's happening on good volume. I do not mind buying averaging up at all. What's the saying? Buy high, sell higher. Yeah, good catalyst. Earnings were good. A little outperforming actually. Let's see what the 3-year looks like. Potential there is like this is a triple actually, but let's not get ahead of ourselves. Let's take the double first if we can. So that's that. Oscar Health again. Why am I doing it? Huge gap up. Earnings, amazing earnings actually. Actually, I think the stock is extremely undervalued. So we pulled back to 50 EMA. I started putting the position on yesterday. I'm adding today. Going back to highest, it's not. I'm not buying the stock. I'm doing synthetic. I'm giving myself time because it's not a mover like Nvidia or whatever. The reason I'm doing it with July's is give myself time, give the stock a little time. Pulling back on low volume. MACD kind of turned up, but still above zero. Not too concerned. Synthetics are 15 puts, 15 calls with 75-cent credits. If push comes to shove, if I'm going to get assigned at 15 minus 75 cents, we're at 14.25. That's where the stock is at. And not concerned. I like the stock quite a bit, actually. So what I like is I like things that go sideways, break out on good catalyst, pull back on low volume, break and pull back to breakout levels. There's still a little bit of a gap left. You may close the gap. I'll just add to the position. That's the good thing about scaling in, scaling out. You don't blow your wad on the first shot. TLT. This is the bond market, folks. See, TLT is an inverse indicator, by the way. If TLT is going down, that means interest rates are going up. This is the 20-year bond inverse ETF. This is the time to put up or shut up right here. Actually, I put the trade on here about a month and a half ago. I had $5,000 profit on the trade. I was like, okay, now we're going up here. Nope. Bond market goes, no surge. We're not going to have a recession. Inflation is very high. I'm going to raise the rates. I'm like, okay. Right about here, I trimmed. Thank God I did. Still a little bit of a loss, but break even is good. Now, why am I doing this trade? Okay, this is the reason I'm doing it. Like, look at TLT going back to 2002. 2002 TLT is 80.5 low. Yesterday we hit and look at the low here in 2023 when the Fed was raising the rates. Okay, from ZERP to 5.5%, TLT went from 180 to 82. Okay, well, going back to 20 years, this is 5.5% at 80. 5% and this is the 20 years. This is 5% at 80 on TLT. I'm telling you guys, if we break 5% on 20 year, watch out. It's trouble. We're going back to 2002. We're going back 22 years, 23 years. That's why I'm putting the trade on. Short the 85s, long the 95s, short the 110s. You guys see these lines? I did 110 because I was thinking interest rates are going to go to 3.5%. No, sir. They're going higher, the other direction. So we trim, we keep the position alive. We'll add, we'll subtract. That's what it is all about. You have a thesis, you structure a trade, you stick with it. You're convinced that things are going to work out. And if things change, you trim or you liquidate, take a loss. You got to take losses, man. You got to learn how to take losses. QMCO. If we get back to break even on this, I'm just getting the heck out of Dodge. 1245, yeah, we're pretty close to break even. Yeah, this is what it looks like. I like these types of charts, right? The last time this thing went to like 91. It's not going to happen now. But then I was looking at Qubit. See, I like all these charts. These are all the quantum stocks that are moving again. Beautiful, these little cups of handles. Go sideways, break out. Rigetti, they're fashionable again. This is Rigetti. Look at that, right? And ARQQ. All the quantum. See all those breakouts on good volume. So maybe QMCO will do it. QMCO is called Quantum Corp Equity. I don't want much. I just want 25 out of it. 900 shares is not going to make me or break me. I bought it well. I'll keep it. Very thinly traded stock, by the way. It's 6 million outstanding. 1.5 million is short. So it's a definite short squeeze candidate. Okay, so here we go. See, this is what life is going to be interesting. Oklo, okay? It's called Oklo Inc. You guys see what's happening? Okay. We were short this stock, actually. Actually, we made money on this. $60 was the high, okay? During the crash and everything else, because look, this company has zero revenue, zero earnings, a $6 billion market cap. All they have is a plan for a nuclear plant. What happens yesterday? President Trump goes, I want nuclear power. There we go. I'm going like, wow. So if you're short this thing, you got your face ripped. If you're long, you're long. Everybody in the boat today. You know what I mean? It's like, that's the problem, I see. And here's nano-nuclear energy. Nice chart. But then, okay, at the bottom of the crash that we had, this thing was 18. Now we're at 34. And Oklo, this company doesn't have earnings either. But supposedly AI data centers are going to require a lot of energy, and nuclear is going to be the way to go. Okay, cool. So this thing goes from 60 to 18. We're at 50. I mean, hey, what is happening? Trading is great, but you're gonna throw all the fundamentals out. Maybe trade with technicals. I don't know. Let's go through the Mag 7 real quick. Apple, President Trump goes, Apple should pay tariffs on everything. I'm like, holy shit, right? Gap down, stay down. Okay, well, there you go. Nvidia actually is hanging in there quite well. Palantir has its own mind. I have no clue what the stock does, but I ain't about to short it and get my face ripped. Actually, we did short it, make really good money on the stock. The first time it got up to 125. Love Robinhood, but I think it's overpriced. Retesting the old high. Mag 7s. I love Google. I think Google I have it in my long-term investment account. I got lucky. I bought about 142, 143. I will add to Google on anything, on any pullback. I think Waymo is going to be the next $1 trillion addition to Waymo, to Google. Google owns Waymo. Let's look at Amazon. Pull back to gapped up. Earnings are great. Pull back to 200 EMA, which is fine. This is the buy zone right about here. Microsoft was the underperformer of Mag 7. Now it's the outperformer. Retesting the old highs. Meta, same thing. Netflix, new all-time high every single day, every other day. Look at that thing, right? So, yeah. And, let's go back to the positions real quick. I put up TLT, I put up QMCO. Oh, let's go look at Pony. Okay, so this is Pony AI. This is a Chinese AV, autonomous vehicle maker, where Uber just invested in it, $100 million, 411 to 22. So I have the 15 puts and short to 20 puts and 17.5 puts, but on a 2-to-1 ratio. MACD is about to turn down. If this thing takes out 16, this thing is going to die. Now you're going to say, well, you're short to 20 puts and you're short to 17.5 puts. I'm like, yeah, die, but go where? 13? Okay, fine. My long puts are twice as many as the short puts, so I'll close the puts, leave the short puts alone, maybe add to the short puts, and then maybe own the stock. So the competitor of this, which I like better, which I'm long 4,000 shares with all kinds of options wrapped around it, is WeRide. You guys see what happened to WeRide? It came public, was going sideways, 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 and then NVIDIA said, we like that. We're investing in it. Stock went from 15 to 44, then dropped all the way to 6. Lockup expiration happened. Insiders were selling, and I started buying it. I started buying it, as you guys know, 780, I think, is my average. Stock is 980, 975, whatever. Earnings came out, they were good, issued 100 million buyback. Uber is also involved in $100 million, as well as NVIDIA is now on WeRide. This is a pair trade. If you guys don't understand what it is, please Google it. Pony short, WRD long. So they both do the same thing. They're both Chinese autonomous vehicle companies that are helping Uber expand AVs around the globe and in the Middle East. Not in the US, obviously, but that's fine. So these two are the Waymos of China. And they're already doing trips on level 4 in China, thousands of trips. So WeRide is let's see, at this level, at 970 is about 3.5 billion market cap, if I'm not mistaken. Don't quote me on it. Pony is at this price, so 17, what is it, 63, is about 6.5 billion market cap. Okay. Why is one double the other one? Either Pony is expensive or WeRide is cheap. Well, we're going to find out, won't we now? But this thing was $4, folks. It went from 4 to 20 in 3 weeks. This is what trading is all about, right? So, yeah, that's why I'm doing what I'm doing. On WeRide, I'm long the stock. It's called the covered strangle. I'm long the stock, short the 10, 12 and a half, 15 calls expiring in June. That's a covered call. I'm also short the 10 puts. I was short the 5 puts when I first started the position about a month ago. Those also hit the wall, covered those, rolled them up to 7.5. Stock went higher, covered those with profits, obviously. Now I'm short the 10 puts with the 12 and with the 15 calls. Took in $2.25. 10 minus 225 will put me at 775. I would love to buy more shares at 775 while the stock is 975. So that's what we're doing, man. You know, it's all good. Account's very close to an all-time high, actually. Kept my shit together. And those are the positions. What other stocks you guys want to look at? If you guys want to look at some stocks, please post it. Again, none of this is financial or trading advice. What else am I watching? I like Oscar quite a bit, actually. I said that already. What am I doing? Let's look at my watch list. Let's see what we got. If there's any, market's only down 125. See? Trump must have said something else. I mean, if you shorted the market at the open thinking it's going to die, you're dead. I can't. I just can't keep track. I really can't. Oh, app loving, APP. Nice little base happening there. What else? I like BE quite a bit. Haven't gotten in yet. I like all these energy stocks because of the AI data center boom that's about to happen supposedly. They provide energy for those. I like that one. Let me go through my long-term investment account. I bought some Kava about 82 range. Rally to 95. I love the company. I will sell some cash secure puts to own more shares. I own Unity Software. Right about here, actually. I own Google. I had Robin. I sold it with a double. It doubled again after that, which is the 2x ETF of Hood. I had Soxel. I sold that with a double. I don't want to trade short term in my investment account because of capital gains taxes. So at the moment, those three: Google, Kava, and Unity Software is what I have. I also bought Nike. First time in about God knows forever. I paid about 53, 54 for it. I think it's fair. I'm not going to sell cover calls. Just let it go. I will buy more if it pulls back. So long-term investment account versus short-term trading account. You guys got to separate the two, because if you don't separate the two, your taxes are all messed up. It's easier to keep track of everything. Gold, like a dumb shit. I didn't do anything when it pulled back. Literally did a 50 EMA, and now we're retesting the higher. The higher end of the range. Gold's 2x ETF is Nugget and UGT. This is getting wild, which I will trade that way, gold that way, with NUGT or dust, which is the 2x bearish ETF. Gold and GME is breaking out, huh? Somebody told me that. Let's see. Ooh, this is a 1 year, 1 day, by the way, on GME. Interesting. They're buying Bitcoin, right? Remember, they issued convertible bonds. Oh, talk about Bitcoin. IBIT is the BlackRock Bitcoin ETF, all-time high. MicroStrategy, Mr. Money Glitch himself, Michael Saylor. That's pulling back today. That's interesting. Well, they're squeezing the MNAV on that, it looks like. Okay. Okay. There's another one. It's green now. It was down today. Ionc Inc. That's another quantum computing stock. Jesus. Yesterday it was up like 15 points, 20 points, whatever the heck it was. Well, maybe I have a chance to break even on my QMCO. Let's see where it's at. 1240. Yeah, pretty close. We just need a run with good volume. I'll keep that. I like Archer Aviation. Pulling back to 10. I think it's the jam right about there. ACHR. I will do some synthetics on that if we get to the 20 EMA, which is right under 10, and add to it down to 8.5 range. That's that one. Whoa. I like Lyft actually quite a bit. Good earnings, companies turning around. It's like a bull flag kind of a situation happening here. Uber made a new high yesterday, I think. It's pulling back to 20 EMA. These are all buy on pullback stocks, folks. Don't short shit yet. What else? Yeah, NNE, that we showed that one. The nanonuclear, Oklo, we showed that one. Palantir up another 2. Holy gosh. I don't know what's going on. I mean, companies selling like 300 times sales. I don't know. There'll be a time to short all these things, of course. At some point. Qubit, we missed everything. Just freaking, you gotta do it, Serge. I don't know. That's my shopping list at the moment. If you guys any SMR? That's another nuclear stock, right? Yep, NuScale Power. Look at that. Retesting the all high. Jesus. CCJ is another. They provide uranium. There you go. There's some, stocks are to be bought and sold. I don't give a shit who says about these. You can buy the index and DCA and do whatever you need to do, but stocks are to be bought and sold, man. Look at this thing. 62, 35, 58. There you go. Just buying Tesla up today. I'm building another flag, I'm telling you. If you guys watched me a couple of weeks ago, I said it's going to move $60 one way or the other. Well, sure enough, it broke out at 300, hit 360 up to the nose. Now it's bull flagging again. Supposedly the robotaxi is coming in June. Don't know. Love the guy, love the company, love the car, but he overpromises and underdelivers mostly. But you can't question Elon Musk. So I think it looks like he quit Doge as well. And that's why the bond market is saying, oh, okay, we're not going to cut the deficits. TEM. Temple AI. These AI stocks are coming back again at the moment. Tesla. TSLL is what I trade on Tesla. I don't trade Tesla that much. It's the 2X ETF. That's bull flagging. Next stop on that is 20. It looks like if Tesla breaks out, obviously. United Healthcare. How can we not talk about that disaster? So, actually, one of the group members made quite decent money on this when it tanked that day to 248. If that's retest the low or makes a lower low with non-confirming technicals, I'm going to be buying the shit out of United Healthcare. That's it. I shot my wad. I don't have anything else. So let's answer some more questions, and then I'm going to say goodbye at 11 o'clock sharp because I have to be super sharp for my meeting. Think. All right, let's see. La, 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 la. Okay, VIX is gonna. Not really. No, I didn't trade. You're welcome. Okay, VIX says hold on to QMC. Okay, I'll take your advice. Should I buy more? No? Sell below 1105. What's the fucking point of that? Why would I take $1.20 loss if I can take a 20-cent loss now? I don't mess with it. Search says my members are confused. There's always hope. And there aren't any, well, there is some experience. Yeah. Let's call it that. So this is how I'm going to categorize my members. Let's go through ABC group. Okay, ABCD. Okay, if I'm A, we may have another B plus, A minus, and then we have a few Bs, maybe B minuses. I would call you like a C, C plus. You were like a F. You must admit. Now you're like a C plus. You're moving up. So it's all up to you. Remember what I said, Mojotronics? Half hour a day. Study it. Come to the chat group, ask the questions, study some more, and then do it. You did learn quite a bit over the last couple of months, and you did some trades, and you made some money. So learning never stops. It shouldn't be confusing after all I freaking explained to you all, man. Tesla will crush, hopefully. I don't know. Well, Waymo's partnering with not really. There's a sweetheart deal going on. Waymo doesn't need Uber. Waymo needs Uber now, but in 2 years they're not going to need Uber. Futures trader here, Ninja trader, invests most of the day. Yeah, I mean, you know, overnight exposure right now, taking overnight exposure, unless you really know what you're doing, is unnecessary because things like today could happen. I mean, you have long exposure on the futures and then you go die. I mean, cool. Oh my God, you're back to that. Man. You need to let go, Jeff. I got that one. That was up to 50. The open right. Shoulda, woulda, coulda. We all did that. All the horses in the barn. Yes, because, you know, catch-up trade. Because if you look at the lag between actual quantums and that, you know, there's a catch-up trade happening. Tesla will crush. It doesn't look like it, but I wouldn't be surprised if it happens. That's support. There's no support. Oh, you mean on the chart? I don't pay attention to that much. They went bankrupt, right? No. I have way too many things going on correctly. I don't want to mess with shit that's $1. Is it $1? Wolf, right? That went bankrupt. Wolf Speed? Yeah, no. Hey, C plus. Good. What do you want? You want me to give you an A? You need to do a lot more reading, bro. You know? C plus is good. You were F. Do you agree? I'm not trying to be harsh on you, but do you agree you were an F? Now you're C plus? That's a huge move. C plus is passing grade. Okay, I'm going to end on this because I have 2 minutes. Mojotronics. Do you know more than you do 3 months ago or 6 months ago? Yes or no? Yes or no answer. Don't give me bullshit. No, I don't care about any of that. Do you know more than you know? Yes or no? Yepper. There you go. See? There you go. Now it's all up to you. Remember, folks, I'm doing this not to give you a fish. I can give you the fish. I am giving them the fish on the chat group. I post a trade. I put it on, take a screenshot, post a trade. You want to do it? Do it. You don't want to do it? Don't. If you don't do everything I'm doing and you pick the loser, don't come complaining. Because I have losers. Guaranteed. So, but overall, the way I look at it, how much am I up this year? 20%? 30%? Okay, cool. That's it. You got to do everything I do. If you don't do everything I do, your equity is not going to match mine. Again, none of this is trading or financial advice. So anyway, all right, I got 1 minute. Anything else? Much love. Memorial Day weekend. Enjoy the 3-day weekend. I'm going to shave. Don't worry. This looks like I look like a WWF wrestler. What the fuck? Have to admit, I'm slacking on the thing. Yes, you are. Yes, you are. I know you are. I know you are. Most of you are. If you remember, I give you tough love. I'm not going to, I'm not going to just go, you're great, like your mom or all the moms these days do. You're the best, son. I'm like, no, you suck. Get better. No, tough love. You need to, trading is very difficult as it is. Okay. You guys need tough love, but we have fun on those member groups. We needle each other a little bit. I have one member who has absolute confusion going on with Pony AI position of mine. I may have to pull him aside and give him a little pep talk on that one. They all go like, we don't know. I'm like, I don't either most of the time. No, actually I do. I have a plan. And again, it's part of the supermarket basket. It's like a little part of it. There's many other foods that I put in there. If all of them, see, I like, this is the way I look at it. I have a recipe, okay? To complete this recipe, I need ingredients. See, this is a good analogy. I just came up with that. All these ingredients put together, beautiful dish at the end. But one dish may rot, and it's a trial and error thing, right? But at some point, I'll get the combination right, and my account goes up 100%, and then that's it. That's what we do. But you keep at it. You add a little salt, a little pepper, you adjust, and just make sure that each single position, though, cannot blow you out. That's what you guys got to make sure of. And don't ever give the market a chance to blow you out, okay? That's the key. MicroStrategy rebounding. It's strategy. Okay, I trade MSTU. I don't trade MicroStrategy. We've been trading MicroStrategy forever now through the 2x ETF MSTU, selling cash secured puts, getting assigned, selling calls, getting called away. It's like an ATM machine. I'm a huge believer in Michael Saylor. I DCA Bitcoin. I don't trade Bitcoin. I DCA, dollar cost average. In fact, I bought at the high, I think, on Monday. All I'm saying is do not trade Bitcoin. DCA, dollar cost average Bitcoin. You want to trade? Trade MSTU, trade MFTZ, the 2x ETF bear, 2x ETF bull. They're optionable, weekly options on those. You can make a fortune. The premiums are juicy as hell. Trade that. MSTR is a $300-$400 stock, right? $380, whatever. Yes, the premiums are good, but why not trade a $5-$6 stock that is MSTU? With in mind that there is slippage on these. You got to be careful. I've explained this a million times to my members and on the channel. Also, be cognizant of something called MNAV, right? There is a premium that MicroStrategy sells that to their Bitcoin holdings. Should it be? When it gets to 2, you got to buy Bitcoin, sell MicroStrategy. When it gets to 1.5, you got to buy MicroStrategy, short Bitcoin. You guys have to understand all these nuances. Yeah. Okay, so I'm a believer in Bitcoin. If I'm a believer in Bitcoin, then I'm a believer in Michael Saylor. If I'm a believer in Michael Saylor, then I'm a believer in what? MSTU. I think Bitcoin should not be traded. It should be DCA'd, hodled, buy and hold. Yeah, that's it. And Bitcoin, by the way, it didn't tank when the market tanked. So that's right then and there, it kind of decoupled itself. And on the rally, Bitcoin new all-time high. So yeah, I've been DCing. Good on you. That's exactly right. So if you don't want to mess with what I mess with, IBIT. The IBIT is the ETF of Bitcoin, BlackRock ETF of Bitcoin, dollar for dollar. BITX is the 2x ETF of IBIT. You want a little more excitement, then go to BITX. But again, ETFs should not be bought and held, whatever. ETFs are daily return tools, basically. Okay. Good on you, folks. Okay, I went 5 minutes over. I need to go. Much love. Have a great weekend. Do some barbecue wherever you're at. Enjoy the family. I'll be. I'm not sure if I'm going to do trading with Sergio on Monday because the market's closed. I'll figure that out. Again, trading with Sergio every Monday, 10 a.m. Pacific, 1 p.m. Eastern. Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. If you want to support the channel and become a member, thank you so much. Go click join and become a member. And then you email me, sergio@sergioavedian.com. So then I'll email you back the Telegram chat group link. You can join that where I post my trades without being financial or trading advice. And you get to join the live stream every Wednesday between 3 and 5 Pacific that I do specifically for the members only live streams. So with that said, do it Tuesday. Vic, I have other shit to do, you know. I'm just doing this out of love, you know. I mean, I am making money on YouTube. It's like I'm making 20 cents a day doing this, you know. But I enjoy teaching. I enjoy informing. I enjoy talking about macro. I enjoy trading, obviously. So hopefully I can help some folks. Pay it forward. That's all I'm doing this for. If it was for the money, I would be charging $1,000 for membership as opposed to $9.99. You know what I mean? Big Mac versus a steak. I don't know. I think all my members are getting like prime Japanese A5 Wagyu for Big Mac prices. Think about it. That's also, I'm a man of analogies today. That's a good analogy. So there you go. Much love. See you guys either Monday or next Friday. Or if you're a member, see you Wednesday. Adios.